The stock market has hit another all-time high this week after the CPI inflation numbers came out better than expected, which means that inflation is nothing to be worried about as of right now. So if you trusted what I said in my previous video, I'd like to say thank you. It means a lot more than you think. But what exactly happened this week? The stock market hit a new all-time high. Earnings seasons continued with Tesla and Netflix being the big hitters. The US and China trade negotiations are taking place over the weekend, which I have some interesting takes about it, so let's get into it. First off, CPI inflation came out on Friday morning and it came back better than expected. It's still far from the Fed's goals of getting to 2%, but regardless, inflation is nothing to be worried about, which gives the Federal Reserve more of a reason to cut interest rates. That, along with the labor market crashing, is making the Fed's stance more clear of what to do next. So cutting interest rates is imminent, which happens to be coming up on Wednesday. And in case you're wondering, the stock market has priced in 2 more rate cuts by the end of the year, which would mean that a rate cut will be coming up next week, as well as another rate cut at the Fed's last meeting for the year in December. And by the way, Friday's inflation data will be the last inflation data that we will get until the government is no longer shut down. So hopefully Congress comes up with a resolution soon. But other than a CPI coming out on Friday, no other data has been released that changes the trajectory of what's to come. So if you'd like to know more about the labor market issues that's been going on this year, I'd recommend checking out my most recent video. In more news, the United States is meeting up with the president of China and Asia over the weekend to talk about trade, in hopes of securing a trade deal between the two powerhouses. The negotiations are expected to last all weekend long, and my guess is that they'll secure a deal by Monday. And they'll most likely involve rare earths into the deal, since that was President Trump's biggest concern just the other week. In fact, a recent report came out saying that their meeting on Saturday was very constructive. And if they end up securing a deal, we can assume that the stock market will react positively and may even see a new all-time high. And we'll start to see more people having more confidence in the stock market. In fact, it's already starting to happen if you take a look at the VIX. It dropped over 5% on Friday, which means that more people as well as institutions are pulling out of their hedges against the stock market and placing them back into risky assets so that they can secure bigger profits. However, a lot of people are still not convinced, because if you take a look at the Fear Greed Index, the market is still in fear, which means that a lot of people are still hedging against the stock market as of right now. But once the US and China secures a deal, it'll most likely move to neutral or greed. So has the S&P 500 reached its peak? Well, judging from everything that's going on right now, I'll say no. I believe we still have a bit more ways to go. Some people are a bit more hesitant to get back in the stock market right now because of this whole thing going on with China, and I get it. But once the deal is made, which I believe will happen soon, people will most likely come running back into the stock market. Speaking of which, the president just spoke to the press about trade talks with China, as well as more possible trade deals with other countries. So take a listen.
What are you expecting from your meeting with President Xi? What is your message to him?
We have a lot of things to discuss, including our farmers. We have a lot of things to discuss. The various trade deals that have been made in the past, and some broken, some not broken, but we've got many things. I think it's going to turn out to be a very good meeting.
Do they need to make concessions to get a deal? Are you willing to pause
Yeah,
tariffs?
sure. They have to make concessions. I guess we would too. We're at a 157% tariff for them. I don't think that's sustainable for them, and they want to get that down, and we want certain things from them. I think it'll be very good.
What do you think the odds are you go ahead? What do you think the odds are you go ahead with that 100% tariff on November 1st?
I don't know. I have no odds. I don't want to predict odds. I don't think they would want that, and that would not be good for them. And I would like to see.
Do you expect to finalize your trade deal with, or your tariff deal with South Korea on this trip? It hasn't been signed
Well,
yet.
it's pretty close to being finalized, I think, and so it could be, if they have it ready, I'm ready.
How about Malaysia and Cambodia, those trade deals? Are you ready?
Yeah, sure. If the papers are ready, we have deals with a lot of people, and they're very good deals. I hope they're very good for everybody.
So it sounds to me that a few more trade deals will be made very soon. But as for people trying to time the market, going in and out of investments, to them, I'll say that I personally believe that it might not be the best way to go about it. If you're fully getting out of your positions just because there's a bit more pressure within the economy, well, you might be missing out on a lot of profits. And take it from somebody that went through it multiple times and even up to earlier this year. And I was doing it because it was so much easier to gauge when it might be a good time to take profits in previous years. But as you may know, a great strategy from even a year ago can be different from how it performs now. In my case, it just needed to be tweaked a little bit. I've still managed to do well for myself this year so far, with my portfolio being up over 50% for the year and over 120% from just a year ago. But even with those numbers, I've still managed to make some mistakes, like selling out of a few stocks way too early. Luckily, it was only 2 or 3 times this year, but I believe that these next few years are going to be very different from previous years. I've only been buying during market drops, as I've been doing, but I'll be holding on to them for much longer, because I can see this bull run lasting up to another 2 to 3 years. Of course, I still expect some 10 to 50% market corrections happening in between, which is normal, but I'll be keeping you posted as it all plays out. Earnings season came back this week with a few surprises, with Netflix and Tesla both missing on key expectations. Netflix met expectations on the revenue, whereas Tesla exceeded. However, they both missed on earnings per share. Netflix ended up dropping over 10% after they reported, and Tesla initially dropped over 5%. Then it fully recovered all over the overnight losses by the end of the trading day, which is pretty remarkable. It went as low as $4.13, then rose as high as $4.49 within just a few hours. But here's my honest take on Tesla. Their cars are great, and I support what they're doing over there with robotaxi and everything else, but it's starting to feel like their future is becoming more dependent on the success of their Optimus project, which is the humanoid robot. And judging from Elon Musk's latest statements, he most likely sees that as well. But be ready for next week as earnings season continues. It's going to be crazy because we have Meta, Microsoft, Google, Amazon, and Apple all reporting next week. And also remember that we have the Fed meeting coming up on Wednesday as well. So expect a lot of volatility. And as always, I'll keep you updated with everything going on. But if you gain any value from this video, please give it a thumbs up and consider subscribing. Thank you, and see you next week.